Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 25th of March. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands and recording this on Friday morning the 22nd of March. Let's kick off with a look at the rotation for various stock markets around the world. I've got the weekly RRG on the left and the daily RRG on the right, and the picture is quite similar to what we've seen over the last few weeks, and it's contradicting. So the tails on the weekly are showing different rotations than the ones on the daily, with a few exceptions, I've got to say, because the first one that I look at on the weekly is the Hang Seng Index, because it's rapidly picking up relative momentum, not so much relative strength yet, but it is one of the longer tails on this RRG. And when you look at it on the daily version, you will see that it is now rapidly shooting into the leading quadrant. So that tells me that there is something going on, and obviously the Hang Seng has gone through a very long downtrend and it seems to be picking up right now. What's also captivating is the move of the Nifty, the Indian Nifty, that is now rapidly moving into the lagging quadrant, and here is the tail on the daily that is rapidly pushing into the lagging quadrant as well. So you got the Nifty really going in the opposite direction, where the daily and the weekly are moving together. So that's a market where I'd be very careful, where the Hang Seng Index seems to be coming back to life. All the other ones here, as you can see, are clustering around the center of the chart, meaning that there is not a lot of good stuff to be told. So here's the Nikkei, which has been doing really well. We'll go into that in a minute, and the New York FANG is rolling over. But if you look at the daily, there might be some interesting rotations going on. So the Nikkei index here is picking up again. Compare that with the strong rotation on the weekly. It's rolling over a little bit, but here you can see how they're picking up on the daily already. That is a good thing. So Nikkei and Hang Seng Asian markets seem to be picking up. And there is a good move in the FTSE. That's since a very long time. FTSE's been under pressure for forever, been working in the trading range. I'm going to take a look at the chart in a minute, but that's an interesting rotation as well. Let's go to the same markets, but now against 0%, basically making it a price trend RRG. And what you can see here is that the majority, if not all of them, are still on the right-hand side, and that means that they're still in uptrends. The ones that are rotating back up, so they have a positive heading moving into that 0 to 90 degree angle, those are the ones that are picking up a new leg of their uptrend. And here's the FTSE again with the best momentum, and here's the Hang Seng Index with good momentum. And you can see how the Nifty is actually weakening in terms of price trend, and so is the New York FANG. So those are the markets that are less interesting, but definitely the Dow, the FTSE, the Hang Seng Index, to a lesser degree the S&P, they're really good, and you can see how Europe has rolled over. So here's the CAC rolling over, here's the DAX rolling over. If we go to some of these individual charts, we have the S&P 500 pushing to new highs. This is a nice uptrend, and a market that's trading at new highs is not in a bear market. That's one thing, that is for sure. And what you can see here is that after a period of losing relative strength, it is now starting to curl back up again, and that's an interesting thing. The negative divergence is still in play, although I can argue that if you draw a trend line here, it is breaking that negative divergence, and that's usually a very strong sign. So it's a bit in limbo, but just looking at the price chart and the relative strength, I think that the S&P remains within the boundaries of its uptrend channel, and the relative strength against the MSCI World Index is curling back up. So that makes the US still one of the leading markets in the world. I told you the FTSE index is interesting. Look at this. This has been trading in a sideways range for 8-9 months, and if you extend it a little bit longer, it could even be like a year. So this break this week is very interesting. We're rapidly advancing. This is a massive breakout, so there's a big base. We got the breakout. Next resistance level probably 79.35, 79.40, and then there is the 8,000 level for the FTSE. That is one that I'm eyeing, but it looks as if the UK stock market is finally getting back to life, and that could be a very interesting market to look at. So here's the Nifty. That's going the other way. Obviously had a massive run up, and you can see how it rolled over. We broke that trend line. We broke below the previous lows, so those are not all very good signs. But look at the relative strength versus the MSCI World. This is now rapidly pointing lower, making the Nifty a less interesting market from a relative perspective. And then here is the Hang Seng. As I told you, after a very long downtrend, we broke out. We kind of hovered in this area of resistance just above 17,000. I think that if 17,000 gives way, that could be a new impulse. It could be new fuel for a further rally in the Hang Seng index. And you can see how relative strength is bottoming out around 100, starting to pick up relative strength and relative momentum, pushing the Hang Seng tail into the leading quadrant on the RRG. And then finally, the market that we'd be keeping an eye on, because this market is breaking out above a, 40-year high, I think. That is a very significant move. That's the big fat red line here. That's the high that was set in 1989 for the Nikkei index. And you can see how it's now pushing above its previous high, so it's actually picking up. There is some loss of relative strength because of the hesitation here against the MSCI World Index, but when this can hold, I'm pretty sure that that relative strength will pick up again. And if you look at the RSI, that is getting back there. There is no divergence. There's not a peak here, so there's no divergence. And if you look at the MACD, again, there's no divergence. It's just above 100, and that is a good sign for the MACD. And especially the break to new all-time highs here for the Nikkei is something that we need to keep an eye on. It's a strong sign. Now for this week I want to skip the New York FANG stocks. They're under pressure. Well, they're a mixed bag, so I don't see a lot of opportunities there. But I do want to go to the Forex market, because I think there is an interesting rotation going on in the FX market. So here's the RRG for the G10 currencies, and it's a daily RRG, and what you can see here is that all these tails are rotating at a negative direction. They're all heading towards that lagging quadrant or already in there, like the Kiwi and the Noki. But when all these tails are moving in the same direction at a negative heading, what that means is that the benchmark, which is in this case the US dollar, is actually getting stronger. So this signs strength of the US dollar. And when you look at the charts, it's not always very clearly visible, because if you look at the euro dollar, it's still on the right hand side, but you can see that angle going down. If you look at the euro dollar chart, it's kind of caught inside. I'm not sure whether you call this a trading range. It's quite broad. But there is resistance, which we just tested around 109.70, and we're coming down again. It looks as if we're putting in a new lower high, which would be the third lower high, the second lower high. I can argue that this trend line has been broken. Again, there's no divergence here, but you know, the RSI is coming down. It's in neutral territory right now. So I can totally see how euro dollar would come down to a test of its support area just below 107. It's definitely not a super strong uptrend either. So I'm going to rely on the relative strength, which is telling me that euro dollar is going down. So in the negative heading, US dollar strength means that euro dollar is going down. That means US dollar strength. But the chart that you really need to look at is dollar yen, I believe. If we bring up the dollar yen chart, that is pushing against overhead resistance. It's pretty well defined around 150, let's say 152. That's the high that we saw here back in 2022. That's 151.94. Let's make it 152. Tested that again here in October 23 and then again in November 23. And now we're doing it again in March 2024. But why is this such an important level? Look at when I make this chart really long. Here you go. So here is why that is such an important level. hard to visualize. Here it is. So it's going above many important highs out of the past, and look at where that's coming from. It traded around 220, 240 back in the 80s. When a market like dollar yen is breaking out of such an important, call it a ascending triangle almost, it is an important sign. So keep an eye on the dollar yen chart, and when it breaks 152, I think that will unlock a lot of upside potential for the dollar against the yen. But this is such an important cross that it'll also have an impact on the US dollar strength against other major currencies. So in general, RRG signaling strength for the US dollar, and the trigger probably being US dollar against the yen going above 152. It's a much clearer chart than what we've seen in euro dollar. And I'm wrapping up. I needed to load up a few other charts. I want to take a look at the rotation in US sectors. And what we see here is interesting to also get a handle on the direction of the general market. A few observations that we can make here. So this is the weekly RRG for the sectors, and I'm using the sector ETFs. These are tradable instruments on the CMC platform, and this is the daily RRG for those ETFs. The one that catches my eye is energy. A very long tail moving out of lagging into improving. If I look on the daily, you can see how it's already inside leading and starting to lose a little bit of relative momentum, but still at a relatively high level. This is a sector that's been under pressure for quite some time, and it seems to be getting back to life. That is something that I want to be aware of as a trader, as an investor. The other thing, and that's more of a general nature, is the rotation out of defensive sectors. Now, traditionally or generally, the defensive sectors are utilities, staples, and healthcare. Those three sectors are generally regarded as being defensive. That means that when the market's going down, investors are moving money into those three sectors as they are believed to at least go down less fast than the market. They're the safe havens. When I see money moving into those three sectors, pushing them up in terms of relative strength, pushing them into the leading quadrant, or at least in a positive RRG heading, that is usually a warning sign for the market in general, because that means that money is moving out of the other sectors into defense. That's investors preparing for a weaker market. At the moment, we're seeing the opposite. Look at this. So here is utilities inside the lagging quadrant, moving to the left. A little bit jiggly, but in general, moving to the left. Here is consumer staples, inside improving, but rolling over. Had a bit of a hiccup, but it's now rolling over. And look at healthcare, in improving, but rolling over. So they're already in relative downtrends, and especially staples and healthcare are now rolling over, starting a new down leg in an already established relative downtrend. If you look at the dailies, then you will see staples doing the same here. You will see utilities doing the same inside the leading quadrant, and you will see healthcare bending over to the left. So all three sectors on both time frames, money is moving out of those sectors. That is not a sign of a bear market. That is not a sign of a market that's under pressure. We don't see new signals for more offensive sectors, but what we do see is that, for example, technology, communication services, and financials are clustering to the right. They are in stable uptrends. Look at the jiggly moves. The tails are not too long. They are on the right-hand side, positive relative strength, and momentum is going back and forth. That's usually the sign of a relative strength line that's going to go make higher highs and higher lows. So these are still stable as far as you can see on the RRGs. The two sectors that I think are picking up in strength, are getting more interesting, are industrials and materials to a degree, but also financials. If you look at industrials here, that is bending upwards, and you can see how industrials here are also inside the weakening quadrant and starting to pick up. That's a good sign. And you can see how financials are here on the daily starting to pick up momentum again and move into the leading quadrant and getting back in line with the rotation on the weekly. So communication services, technology stable, so is financials, but financials is getting a new extra impulse, and industrials getting better on the weekly and getting a very interesting rotation inside the weakening quadrant on the daily. So let's have a quick look at the rotation on the industrial sector. And you can see here that that has moved to new highs, pushing to new all-time highs, getting stronger and stronger by the day almost. You can see the improvement of relative strength here on the weekly. That is still ongoing, it's just starting. And where you can see how the daily has already gone through a rotation. It's now inside weakening, that's what we just saw on that RRG, but starting to bend up again. So it's picking up after the break here on that daily chart. So all in all, that industrial sector seems to be getting back to life. After, this is quite, this is March 2021, it's almost 3 years of sideways movement for the industrial sector. And now we got the breakout and we got the follow through in the rally. And that's what you see on that RRG. Ladies and gentlemen, I'm going to leave it at here for this week. I hope you enjoyed the show, and we're looking forward to seeing you again next week at a new update by RRG Research. Same time, same place.